Hey everybody, Brian Shannon here from alphatrends.net. It's Friday, the 27th of September. Let's look at these numbers because we had another pretty solid week for the most part. Biotechs were down. That wasn't a surprise. But for the month of March, we're pretty much up, besides the biotechs, the financials, and energy, which we know are in a downtrend anyways. Let's take a look at these charts and make some sense of it. If you recall, back in May, we're always told each year, sell in May and go away, meaning that markets during the summer really don't do much, so you shouldn't participate. Well, that would have cost you a lot of money this year, obviously. And what about the phrase, or what about what we've been told all since the beginning of this month, that September is typically a bearish month, so avoid the stock market. Well, those phrases, are often correct and they're backed based on real numbers. But the fact is, if they're not doing it at that point, there's no reason to listen to that nonsense and listen and think that the market has to do something during the month of September. We started out the month below the volume weighted average price from the beginning of the month, and we stayed below that. Well, where did the buyers take control? We knew with 100% conviction that the average buyer in the month of September was a winner at this point right here. And since then, they've maintained control. Let's take a look at this chart. People love it because it really simplifies the look on the shorter term time frame. This is a 30-minute time frame, of course. And let me just frame that up a little bit better. What we've been, and move myself over there. So we have over here, of course, this is the SPY trading at 571.40, and this is our 5-day moving average. I've been cautious here. I have been very clear that we're extended, we're hitting this 5-day moving average over and over again, but we're not breaking down, we're not making a pattern of lower highs and lower lows below it. So we continue to give the benefit of the doubt to the buyers. Just the opposite over here in the bottom right corner. As you know, I sold my biotech exposure right here at about 101 and change and have avoided it so far because it's below the declining 5-day moving average. It's a really simple solution here. Well, the NASDAQ above the rising 5-day moving average, same with the semiconductors. If you broaden it out a little bit, you can see that the Dow Jones, which hit a new all-time high yesterday, same thing. It's above the rising 5-day moving average. If it breaks below 418 and a half, it'll make a lower low below a flat to declining 5-day moving average. Then you've got to be a little bit more cautious. The Russell 2000 is maybe going to start to transition higher next week. Same with energy is still below that, but the bonds are maybe going to transition. So let's take a look on these two time frames as we always do to make the most sense of it. So the SPY, as mentioned, we hit all-time highs this week. We broke beyond this band of resistance, and that is likely to become a level of support. We give the benefit of the doubt to the buyers. It's innocent until proven guilty as long as we remain above this level. But we also have a rising 5-day moving average in that area. We can take a look at the anchor off of this low and say that in the month-to-date anchor are approximately the same area. So that means that this 560 level is going to be important for the market to hold, 560 to 562-ish. If we remain above that, I don't want to sell short, maybe for very short-term trades, but we're in a bull market. We're just a day off of an all-time high. We made a new all-time high yesterday in the SPY. NASDAQ, we are getting extended from this level, which I was hoping would provide some resistance and pullback. But I didn't want to get bearish because we were still above a rising 5-day moving average. And above a rising 5-day moving average, you give the benefit of the doubt to the buyers. Next week, if we break down and do something like this, let's say, and then we get trapped below the 5-day moving average, well, then maybe, that means that we need to digest these gains a little bit, and we would look for this area to potentially become support. That's at about 484, I guess. And if that breaks and this level breaks, well, then most likely a test of this month-to-date anchor. If that fails to hold, then we look for levels below that, and we look for the 20-day moving average to come up and hold it. But for now, it remains innocent until proven guilty, same as Wednesday. It's innocent until proven guilty. It's extended, so we don't really want to be aggressive new buyers here. You take your foot off the gas a little bit, maybe tighten up your stops on some longs that you're concerned about, but you certainly don't sell short. Now, what if the market gaps down on Monday? You say, oh, I should have shorted. Well, if it gaps down, it's most likely going to do this. And then if it continues to the downside, it'll do this. And then you'll have your opportunity to short there. There's always another opportunity coming in the market. The Russell 2000 As mentioned, we had this bullish flag forming. We had a nice little shakeout here on Wednesday. Thursday was kind of a little bit of recovery, and today it tried to continue to recover a little bit. This is about as bullish as I've been on the Russell 2000 in a while. As you know, I've been calling it a mess, which it is. But we are back above that 5-day moving average. Monday morning, first hour of the day, we get rid of these two bars, meaning that 5-day moving average will continue to decline for about an hour. But once we start to get rid of this data right here and replace it hopefully with data over here, well, then that will have a flat to rising 5-day moving average. A new uptrend emerges when we make a higher high above a flat to rising 5-day moving average. Maybe you want to get involved if it were to break above here and then add to it above that high and set your initial stop below here. And then as it starts to rally and it breaks this high, well, you raise your stop up under here. And then you keep raising your stop up underneath the most recent relevant higher lows. And maybe you get stopped out at 224, or maybe it continues to make higher highs and higher lows, and you get stopped out at 236.85. Nobody has a crystal ball. That's not the point. We're not trying to predict. We're trying to anticipate the potential scenarios and know when the odds are in our favor best. Semiconductors, they really looked like they were going to undergo a little bit deeper profit taking. But of course, we had Micron come in and save the day with their earnings report, which, by the way, I don't know what happened to my year-to-date anchor on here. I think I do know. There it is. And, we came up to the year-to-date anchor. And I was on Trader TV, which you can find on YouTube, by the way, and said that that's probably going to cap the upside in this area. And it is so far. So, Micron needs to digest. Don't chase this move, whatever you do. But it reinvigorated the semiconductors enough to go break beyond this level. Well, as you know, I'm not a fan of breakouts when the market's already extended. So people who bought into there are starting to see some profit taking. We've got lower high and lower low, but we have a rising 5-day moving average. More important, if it gets trapped below it at some point next week, then perhaps we continue a little bit lower. I still would love to see a pullback, maybe down, somewhere like this, and then build the case for a little bit deeper pullback consolidation, and then a bigger move higher. Of course, NVIDIA is going to be important in that. We spoke about the inverted head and shoulders pattern. This one didn't really follow through much on the upside after that Micron. So there's still some sellers around in here right up against that neckline from the inverted head and shoulder pattern. So it's actually a good thing because the 20-day moving average will begin to rise on Monday as we get rid of this data. The 50-day moving average is starting to flatten out. So after this next consolidation in NVIDIA, and maybe it does something like this, I think you're going to see that this is likely going to emerge again as the leader and probably push out to new all-time highs. Of course, that will drag the semiconductors with it, not typically the other way around. Biotechs, this is what I sketched in for you on Wednesday. I think I might have even done it. I did this on Wednesday in the YouTube video. And so far, it's doing exactly what it's supposed to do. There's no hurry to get involved in these. We spoke about the fact that, it's likely to rally up to the declining 5-day moving average, sucker people in, and then pull back. Now what we need to see is a couple more days. So, Monday, we averaged this data out in terms of the 5-day moving average. So Monday, maybe we see a nice little shakeout like this, and then on Tuesday, that 5-day moving average begins to flatten out. Tuesday could be the day to be a buyer of the biotechs. I'll let Alpha Trend subscribers know, as I do every single day. By the way, if you're watching this on YouTube, please like it, subscribe to the channel. And I'll tell you, next week, I've got something big coming on Twitter. If you don't follow me on Twitter, that's going to be your loss because it will only be available on Twitter or X. Financial stocks. These guys get a little bit of profit taking, but they're becoming more neutral here. They're above the 5-day moving average, which is declining. So maybe another day or two of consolidation in here, and then they continue to move higher. I don't trade bonds, so I don't really care. The TLT, what did we see here? We saw that the bonds rallied right up until the Federal Reserve meeting. They came up to the anchor from the high in August of 2021. Go back and look at the videos. We've been talking about that for a while. In fact, I said it's likely to head up towards that level. And that's where it became, by the rumor in front of that, and as the news of the Fed came out right here, well, bonds sold off, yields began to rise. Now, what do we have? We have it down to the 50-day moving average. We have it down to the anchor from this low right here. So this is a level of interest on the daily time frame. Is there enough evidence to say that we should be buyers of this? Well, we have on the shorter term time frame, the 5-day moving average is declining. And on Monday, what will happen? Monday, we will average this data out, meaning that it's likely we'll see the 5-day moving average begin to rise. So then if we see a higher high above that flat to rising 5-day moving average, in my mind, that's where the resumption of this bigger uptrend on the daily time frame comes into alignment here. My first book was Technical Analysis Using Multiple Time Frames, How to Profit from Trend Alignment. This is where they would become in alignment. So it would become the buyer's game to lose. They would be in control here. If they lost control, it would mean that they broke a lower low. So, to be a buyer right above here with a stop under here, or maybe your worst case stop under there, depending on what your risk parameters tell you. That's what we're looking for the bonds to be able to continue to resume this upward momentum and perhaps go break through that anchor from the 2021 high and continue to show profits on the long side. Financial stock, I always say that. Energy names, they did exactly what we spoke about. They did exactly what they were supposed to do. They found supply at the year-to-date anchor, the 200-day moving average and the 50-day moving average. Go back and look at the videos for the last 2 weeks. That's exactly what we were looking for. They broke down from there. They're below the anchor from this low, or they're right at it, and the month to date. Maybe they're going to start to stabilize in here. I mentioned on Wednesday as well, Oxy Petroleum, that everyone's been talking about this one because Warren Buffett owns it. It's in a stage 4 decline. It's in a longer term. This is just perfect stage 1 accumulation right over here. Stage 2 advance, stage 3 markup, and a stage 4 decline. Stage 4 decline simply means lower highs and lower lows below a prior band of support than the declining longer term moving averages. I'm not predicting this goes down to here, but it wouldn't surprise me if it did. I just look at it as guilty to proven innocent. There's no reason to buy a stock in a downtrend. Let Warren Buffett rescue it. Let him go in and buy up all the shares. He'll probably come up, they'll probably say Warren Buffett bought more shares. It'll gap up to 52 and then it'll fade off. Something like that is likely to happen. Make your decisions to buy based on your time frame. Warren Buffett's time frame is, for Oxy Pete, is probably 10, 15 years down the road, well after he's long gone from this earth. So that's his time frame, or his investment management firm's time frame. It doesn't have to be your time frame. I guess we should take a look at Bitcoin because people have been asking me about that a lot. Where's my Bitcoin chart? Let's take a look. And Bitcoin is kind of doing what we want it to do. Last time I updated, we spoke about the fact that it is rallying here. It made a higher high, and I'd like to see it come up to this level. This is the volume point of control since the beginning of the year. So since we've traded in this bigger range, we made a higher high. We don't have a good higher low. I'd love to see it fail at about 67.5, and not really fail, but start to pull back like we sketched in a week and a half ago. I'd like to see it pull back, maybe down towards 62.5 or so, create a higher low, and then from there, I think it would build the energy to break past this 67.5 and finally go on to make new all-time highs again and perhaps head for that $100,000 level in Bitcoin. Those are some of the things I'm looking at. I update this stuff every single day for Alpha Trend subscribers. Thanks for tuning in. Have a good weekend.